You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 7th day of October, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. October 7th. Now, many of us just woke up today and thought, well, it's another day. It's October 7th. Now, if I said today's 9/11, you'd know exactly what I was talking about, wouldn't you? Of course you would. 2 years ago, on October 7th, one of the most horrific things that has ever happened in our lifetime took place. Today marks 2 years since Hamas fighters stormed Gaza, shocked the world, and triggered a brutal war in the region. Militants killed about 1,200 people and kidnapped another 250, including American-Israeli hostage Eden Alexander, who was just 19 years old when he was taken and then spent 19 months in captivity. Today, Alexander is actually set to meet with President Trump for a second time since his release, as the world waits to see if the White House latest truce offer will finally bring the remaining hostages home. Peace conversations continue in Egypt while American negotiators Jared Kushner and Special Envoy Steve Witkoff are meeting with top Israeli negotiator Ron Dermer and Hamas representatives. We're going to pause for just a moment to remember all the lives that were lost on October 7th, 2 years ago. I'm not going to go into all the graphic details. You've heard it. You've seen images of it. The things that were done to little children. I don't need to dredge that up. But I do believe that we need to honor the innocent. But just a moment of silence. Hard to imagine it's been 2 years. Delegates from Israel and Hamas began indirect talks. Now, I have no idea what that means. I'll say it again. Maybe you know what it means. Delegates from Israel and Hamas began indirect talks in Egypt yesterday to hash out sticking points in a U.S.-led 20-point proposal to forge a ceasefire and arrange a hostage prisoner exchange. Indirect talks. Does that mean two people go into a room and one faces one wall and one faces the other? I mean, is that how does that work? An indirect talk? Maybe we need direct talks. I don't know. Negotiations are mediated by the U.S., Qatar, and Egypt. The parties have conditionally agreed on the broader contours of the plan, but disagreements remain on the details. The proposal includes Hamas releasing the 48 remaining hostages in Gaza, roughly 20 of whom are believed to be alive. What kind of monster keeps a dead hostage? Within 72 hours, in exchange for Israel freeing 1,700 Palestinians detained after October 7th and 250 prisoners who are serving life sentences. It also requires Hamas to disarm and surrender governance. Questions remain on whether and when Israeli forces will withdraw from Gaza. President Trump has said Israel would need to stop attacking Gaza before hostages are released. The Israeli military maintains it is mostly carrying out defensive strikes to protect its troops near the border. French Prime Minister Sébastien Lecornu resigned yesterday. Now, if that name's not familiar, well, he's only been the French Prime Minister for a short period. In fact, when he resigned yesterday, that was just one day after unveiling his cabinet. That would be like Trump throwing his keys on the resolute desk in the Oval Office and say, you know what? I don't need this. I'm going golfing. You're like, well, that couldn't happen in America. Really? Now, Lecornu has only been in office as Prime Minister less than a month. And he's already thrown in the towel. That makes his government France's shortest lived in modern history. Lecornu is France's third prime minister this year, as consecutive governments fail to muster the parliamentary support to pass an austerity budget. Now, you can Google it if you want, but an austerity budget basically means, hey, we're going to stop spending more than we take in. I mean, how do you run your household? Well, if you're deeply in debt, well, but if you're not, then that means you have a budget in place and you stick to it. Last year, the country's budget deficit reached 5.8%, nearly double the European Union's 3% limit. In July, the bloc added France to its list of countries being monitored for compliance, requiring France to meet target goals by 2029. France's latest budget was due to be presented today. I suppose they could be kicked out of the EU. The announcement has prompted fresh calls for President Macron to hold snap parliamentary elections or resign. After Macron lost his parliamentary majority in last year's snap elections, he has resisted similar calls, pledging to stay in office until his mandate ends in 2027. And the euro slid about 0.7% on the news. Guess you could say things are tough all over, huh? Turning to Capitol Hill, hopes for ending the government shutdown after a week of bluster could hinge on negotiations about reviving expiring Affordable Care Act subsidies. Timing is the issue. Republicans are dug into a position that they will only talk about this health care issue once Democrats vote to end the shutdown. Democrats respond that any conversation about those subsidies must take place now, saying a shutdown vote is the only mechanism they have to force Republicans to confront the issue. And what's the issue? The issue is you, the American taxpayer, paying for the health care of people who chose to come to this country illegally. That's it. Bottom line. Hospitals are collapsing. They're going out of business because the emergency rooms are filled to the brim with people who need health care. And you know what? I'm the first person to say that everybody deserves health care. But when you choose to go to a country illegally, and then you expect that country that you have invaded to take care of you, to feed you, to put money in your pocket, to put a roof over your head, and provide medical care. Hey, a lot of natural-born American citizens don't have all that. So this is a sticking point, and don't let anybody tell you different, because that's the truth. And if you dig just a little bit, you'll figure it out. Oh, they're running all kind of interference, calling it all kind of different things. But that's the bottom line right there. Short of moderate Senate Democrats flipping to support the GOP plan, which remains a possibility, this healthcare debate is increasingly seen as the likeliest eventual avenue for negotiations that could reopen the government. The Burbank airport was closed the other day because they didn't have any air traffic controllers. Why? Because they're afraid they're not going to get paid a week from now. So they walked off the job. Now there's a patriotic American for you. When you have a job, when you have a responsibility, these are jobs that involve the safety of people's lives. When you walk off that kind of a job, and you know what? These guys aren't making chump change. The lowest pay is about $180,000 a year. If you're an air traffic controller in New York, it's more like $400,000 a year. And they walked out, and because they're afraid they're not going to get a paycheck that's not due till Friday, I think it is. We need to train some air traffic control. We may have to take the bus for a while we train a new group of air traffic controllers who understand the importance of their job and are willing to do it properly. Now, back to the healthcare issue, Democrats have contradicted it. They noted that they haven't heard anything from the White House in a week. President's most recent post, put him in line with the Republican stance that he's open to talks with Democrats. But first, they have to allow the government to reopen. Question for investors and market watchers is increasingly how long it will take both parties to even come to the table. Well, the Republicans, it was passed. Republican side of the Senate, the House, it got passed in the House. Senate Democrats, they own this. And if you believe anything else, you really need to get an education. Wall Street. We'll talk about it while there still is one. Shares in Tesla slumped today, in early trading today, after the electric vehicle maker revealed that its new product, hinted at in a series of cryptic posts on X on Sunday, I showed it to you yesterday, is a stripped-down, cheaper version of its Model Y SUV. Tesla shares gained more than 5.4% by the closing bell yesterday, after the EV maker posted GIFs on Sunday, and I showed these to you yesterday during the broadcast, of a spinning company logo with the date 10/7, and of what appeared to be car headlights shining through the smoke. So this post goes on next Sunday. The stock runs up 5.4% yesterday. And then when everybody finds out what the news is, well, now it's down 2.75%. The stripped-down Model Y will lack certain features and use less premium materials to offset the loss of the up to $7,500 federal tax credit, according to Bloomberg. It's the first major product announcement since October of 2024, when Tesla unveiled its self-driving robotaxi. Haven't had any news about that in a while. Gold futures soared to new all-time highs above $4,000 today as investors piled into the precious metal amid a weakening dollar and growing expectations for more Federal Reserve rate cuts. Futures for the yellow metal are up more than 50% year to date, marking their highest return in a calendar year since 1979. Meanwhile, a new report from the World Gold Council, released today, showed that global gold-backed exchange-traded funds, ETFs, recorded their largest quarterly inflows on record during the 3-month period ending in September. And BTC put in a new all-time high yesterday. Canadian mining company Trilogy Metals, TMQ, soared in trading today after news that the Trump administration is taking a 10% stake in the company. Trilogy Metals shares jumped more than 250% in the early hours after Reuters reported last night that the administration is investing in the Vancouver, British Columbia-based company and permitting an access road to a potential mining site. Now we're going to talk about AI for a second. I encourage you to go to the Tucker Carlson podcast, wherever you get your podcast. It's free. And scroll down about 3 episodes, and you'll see the word occult in the headline. The gentleman that Tucker interviews on this particular podcast, he talks about what's going on in Silicon Valley right now. And that many of the leaders in the tech industry, men who you would not even think were believers, because they're so smart. Many of them believe, the very people behind it believe, that AI could be the Antichrist. I know, sounds far-fetched. You owe it to yourself to spend the hour listening to what's said, so that you can be well informed and make up your own mind. I know there's something very mysterious going on with it, because oftentimes it will give me answers that contain information that I never put into it. And I've asked it, where'd you get that information? And it said, well, you must have mentioned it in a question you asked, some time back, or some kind of, duck and weave kind of answer. So, again, Tucker Carlson podcast, go to Apple Podcasts, just Google Tucker Carlson's podcast. I listened to it Saturday morning, but I think it came out like last Friday or Thursday. You'll see the headline. Okay, just click on that. It's going to change your mind. I'm not saying it's going to stop you from using AI. Maybe it will, maybe it won't. I don't know. But you're going to come away from that. And this isn't, and as you listen to this guy, this isn't some third-rate conspiracy theorist stand-up comedian. This guy seems to know an awful lot about what he's talking about. So, that's my challenge to you. Listen. You can listen while you're driving, listen while you're walking, listen while you're washing the dishes, cleaning the toilet, or making the bed. They have these little things called earbuds now. You've probably heard of them. Anyway, the reason I bring up AI, the amount of debt tied to artificial intelligence has ballooned to $1.2 trillion, making it the largest segment in the investment grade market, according to JP Morgan Chase. Now we know what the Bible has to say about debt. It's not positive. AI companies, what it says is the debtor is slave to the lender. It says, don't do it. AI companies now make up 14% of the high-grade market from 11.5% in 2020, surpassing U.S. banks, the largest sector on the JP Morgan U.S. Liquid Index at 11.7%. Again, that comes from some analysts over at JP Morgan. The bank you can trust. Yeah. The analysts identified 75 companies across tech, utilities, and capital goods sectors that are closely tied to AI, including Oracle, Apple, Duke Energy. Many of these firms are prolific debt issuers, and in the case of tech, they are cash rich with very low net debt. The cohort trades at 74 basis points, 10 basis points tighter than the broader Julie Index. Companies linked to AI have seen their equity valuations skyrocket since ChatGPT launched the modern AI era 3 years ago, as investors rush to get exposure to the technology that has the potential to shake up the global economy. That sparked concerns that any setback in earnings from megatech firms could trigger a broader sell-off given their stretched valuations. This could be the thing that crashes the market. Not a forecast, just an observation. And last, Amazon Relay has evolved significantly beyond its traditional power-only foundation, creating new opportunities for carriers with diverse equipment configurations. As Amazon's consumer sales continue growing and the company expands support for third-party shippers, Relay recognizes the critical need to accommodate carriers operating various trailer types and specialized equipment. When carriers think of Amazon Relay, many picture hauling Amazon's distinctive trailers over the road, While this remains a core opportunity on Relay, the company is also able to accommodate carriers with diverse equipment types and operational preferences. So if you're a trucker or know somebody who is, Amazon just might be in your future. Imagine that. All right, let's go. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, silver. We're currently in week 375. That's a little over 7 years. Over the last 375 weeks, we've issued over 20,500 individual handcrafted alerts. Actually, it's 20,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 6:30 a.m. Eastern. When she updates the recap this afternoon, these numbers will have changed. Some additional alerts went out this morning. But at the time she did the recap, since the markets opened Sunday night at 6 p.m. Eastern, we had issued a total of 15 alerts, now significantly more. At the time she did the recap, we were still waiting on the outcome of 10. That gave us 5 actionable alerts, of which 1 or 20% would have been stopped out. Again, based on simple market structure and a simple process we teach all of our passport holders. Every logic alert. Again, there's over 20,600. I think we're pretty close to 20,700. Every logic alert has an entry price, long or short, an initial target designed to help you get your goal for the day, typically additional targets, and then of course a final trade to target. On a long trade, the final trade to target is the weekly trading zone above, and on a short, the final trade to target is the weekly trading zone below. Now the alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So that historical average from a little over 7 years now, remember, what we've averaged is 20% or less. That's over 20,600 individual handcrafted alerts. At 375 weeks, obviously that's a very long time. As I said, a little over 7 years. But many years before there was a Logic 247, we had our original alert service, the concierge trade alerts. They're different in a number of different ways, but for the purpose of this discussion, I will point out that they do not come out around the clock like the logic alerts. They're published as a static report, typically 5 minutes ahead of the Globex open each evening. So we're in the Tuesday session now, which began last night at 6 p.m. Eastern. The Tuesday session will end today at 5 p.m. Eastern, and after an hour break, the Wednesday session will begin tonight at 6 p.m. Eastern. In other words, all of our traders and even trial members had all of these targets 5 minutes before the market opened last night. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. As we go through each of these markets in a granular fashion, and you see these targets drawn onto the chart, just keep in mind that all of our traders and even trial members had the targets 5 minutes before the market opened. So with that, we can actually go to the charts. And this is where we always start with the bellwether, the S&P 500 E-mini futures. Now, overnight, put in a new all-time historic high. $68.0275. Now back on Friday, we put in a new all-time historic high at 6,800. Yesterday, we had an inside day, Monday. See the green candle there? An inside day simply means we didn't take out the previous day's high or the previous day's low. Now we have what is a bearish engulfing candle. In other words, we've taken out yesterday's high and yesterday's low. A bearish engulfing candle can be one of the strongest reversal symbols you'll find anywhere. Okay? This high is higher than yesterday's high. This low is lower than yesterday's low. When you find a bearish engulfing candle on a daily chart, it's usually pretty important, especially based on context. Speaking of context, I knew I forgot something. I got sidetracked with the skipped right over our daily devotional. Tell you what we'll do. Today's installment, we'll pause for tomorrow. But we'll still pray, because we always pray on this broadcast. Heavenly Father, teach us to serve faithfully in everything we do. Not just to please people, but to honor you. Help us to work with sincerity of heart, remembering that we serve Christ our Lord. And for those who lead, give them wisdom to treat others with fairness and respect, showing no favoritism. May our work and relationships reflect your love and righteousness. It's in Jesus' name we believe and pray. And everybody said, amen. All right. I did not give you the numbers from around the world either, which I normally do, and I will do right now. And then we'll continue with the recap. All right, starting here in the U.S. with the cash markets, or the indices as they're called. The Dow is down 160 points. NASDAQ's down 131. S&P 500 is down 24, and the Russell 2000 is down 32. That's well over 1.25% for the Russell. In the commodity basket, crude oil down 28 cents, trading $61.41 last. Gold up $18.30, trading $39.9460 last. Silver down $1.14, trading $47.30 last. That's a drop of almost 2.5%. In the Asian markets at the close, the Nikkei rose 6 points. Shanghai gained 20. The Hang Seng dropped 183. And in the European markets at the close, FTSE up 4, the DAX up 7, the CAC up 3. So we had a mixed day in Asia. It was a green day for the UK. Quiet day, but green nonetheless. And so far, it's a big red turnaround Tuesday here in the US of A, as you can see on this chart right here. So we'll pick up with the recap. Now, price always reverts to the mean. In our case, the mean is green. We call it the BBC. It just stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, as it did April 24th, we're bullish and expect higher prices. But as I just said, price always reverts to the mean or pulls back to the BBC. Pull back held, pull back held, pull back held. And the pullback held, and the pullback held. And the pullback held, and the pullback held. And the pullback held. Now, we haven't quite made it to the 100% fib extension, which is based off this low, connected to this high, connected to this retracement low. Now, Friday, we had a new all-time historic high at 6,800 even. Today, though, the new high is 6802.75. And this bearish engulfing candle, we're sitting on support times 2. When the step line and blue and climbing get directly below price, they become potential support. If price trades through, and as you can see, it has traded through, but then pull back up, because this is support here, okay? But how we close today, if we close below these two indicators, then I have no doubt that we will find ourselves by this time tomorrow, if not sooner, at the daily BBC. Remember, price always reverts to the mean, okay? Now, I just showed you, going all the way back to April, how every single pullback on the daily chart has held, even when it spikes it like this, okay? Even when it closes below, the candle is still touching the BBC, and then the next day you pop right back above it. It's only when price actually pulls away like this. See how this pullback held? See, that one held, that one, here we go. Okay, we closed above the BBC, then we opened and closed above the BBC, okay? So now it's official. That pullback didn't hold. But every single one since then has held. Now, while we know the pullback holds more often than not, we also know eventually it won't. Like April 24th, okay? We don't know when that's going to happen, but we know eventually it will. So watch for it. And not only will we see a price revert to the mean, but this market is due for a much deeper retracement. if it's going to keep climbing. The shallowest possible Fibonacci retracement is at 6360/61. That's the 24% fib. And we got the 38% fib retracement, and then the 50. I think we need a 50% retracement to keep this market, this bull, intact. If we don't get it, I think we're going to see an implosion. That's the day where everybody runs for the exit at the same time and people get trampled. Some of you are old enough to remember Black Monday, and some of you have studied the markets enough that you've read about Black Monday. Okay? So, see, that's not a good thing. That's not a healthy thing. A measured move. In other words, you get a leg and a retracement, a leg and a retracement, and a leg and a retracement, and a leg and a retracement. And then you find support, and then you start building in the other direction. Leg retracement, leg retracement, leg retracement. Okay? That's how a healthy market works. This is very overextended. Now imagine if it all happened in one day. Just think about it. With our government shut down and all the geopolitical tension, don't count it out. Not a prediction, just an observation. All logic alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. If it ain't broke, leave it alone. So I have. The vertical lines that you see here separate today, Tuesday. This is Monday. Back over here is Friday. Okay. Don't really need to pay any attention to Friday because these horizontal lines are the weekly trading zones. They're published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. We've published these weekly trading zones since December 14th of 2009. Yep, that's right. December 14th of 2009. And quite a ride. Every Monday. And you know what's changed about the weekly zones? Absolutely nothing. When price rallies up to a weekly zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. Support always sends the market looking for resistance. Resistance always sends the market looking for support. Support always sends the market looking for resistance. That's simply how markets work. Now, the purpose of the logic alerts that I showed you earlier is to teach you to be able to read the chart. Okay? Now, as you can see, yesterday's high, which is what today's long target was based on, if you follow it across over to Friday, now we spiked it and we took out Friday's high by just a little bit, but we're always suspicious of just a little bit. We spiked it, but we closed back below the long target. And then it's just been red candle after red candle. We opened here last night, okay? Right above the BBC, but we had red and falling overhead. That's bearish. So in this, now remember, all of our traders and even trial members had these targets 5 minutes before the market opened. We hit the short target in the second 30-minute candle. The candle opened at 67.90 and dropped, well, we'll call it 12 points. 12 points in that one 30-minute candle. Okay. Now you could have gotten out at the target, or you could have stayed in it until the market started to shift. See, it came on down to the zone The zone is 67.75/76. This is 87/88. This is 14/15. Okay. They come out at 6:15 on Monday morning so that our traders have the opportunity to get them on their chart before Wall Street even wakes up for the week. So we come down to the zone support. Market's going to go look for resistance, which it found at the bearish cross right here. When the red line gets below the green line and leads to an extended move, that's called a bearish cross, okay? Now, when you have a bearish cross, the first time price revisits that area will almost always be good resistance. I think we can all agree that that was good resistance. 1, 2, 3, 4 30-minute candles. Couldn't break it. So resistance is always going to send the market looking for support. What's the zone? 75/76. So again, the zone becomes support. The low of this candle is 75.75. Okay, so we came into the zone, 75/76. Support sends us looking for resistance. So right here, we hit the underside of the short target and the BBC. So that's resistance times 2. That sends us back to the zone. Support. Now support's going to send the market looking for resistance. Only one of 3 things happens when price encounters a weekly zone. 70% of the time, it's going to be this, consolidation. 20% of the time, rejection. 10% of the time, the slice. So this candle right here opened at 67.91, and it gave you 7 points to the target. It gave you more, but if you just got out at the target, remember, it only takes 2 points to get your goal for the day. Resistance will send the market looking for support. And where to find it? At the weekly trading zone to the tick. This zone is 47/48. Remember, once the zones are published, Monday morning at 6:15 a.m. Eastern, carved in stone for the entire week, they don't change in any way whatsoever. That's how it's been since December 14th of 2009. Here's where we opened last night on the Dow. This was the opening candle and the second candle. Now, again, all of our traders had these targets 5 minutes before the market opened. This candle opened at 9:49 and 9:49.50. We'll call it 60 points. It's more than that. Call it 60 points. It only takes 20 points to get your goal for the day. And there it all is at 1 30-minute candle. And then we consolidate for hours at the short target. Now the short target, see where red turned to blue? See, all you got to do is learn how to read the chart. Learn how to read what the indicators are telling you. Now, 20% of the time or less, the market's going to do something other than what you expect it to do. Do not waste time or treasure chasing phony holy grails that promise you they've figured out a way to never get stopped out. The only way to never get stopped out is to not use a stop, and then you just go out of business. So price drops. Now you see right here. You see where you got a wick sticking up and a wick sticking down? Support. Support sends the market looking for resistance. Found it at the long target. Spiked the long target, but failed to take out that high. A sign of weakness. So we come all the way back down to the short target again. Hit the short target, hit the long target, hit the short target. Now what are we doing? We're consolidating at the zone. And we're about to get a bearish cross right here. Step line starting to hook to the right. If it gets on the right side of red and falling, then we might see a retracement back to the BVC. Okay? That's the green line. On the Russell, this is where we opened last night. And we dropped to the weekly zone. And by 8 o'clock, market opened at 6. Everyone had this target 5 minutes before the open. In 2 hours, we were at the short target. Right there, 8 o'clock. Okay? See that? 8 o'clock. Now, we opened last night at 2503. So this would be 9 points to the target. You only need 2 points to get your goal for the day. When the market finds support, as it did here, it's going to go look for resistance. Remember, the pullback holds more often than not. That sent us back to the short target. So buyers try again, and they managed to drive us all the way up to the weekly zone. That was published yesterday morning at 6:15 a.m. Eastern, 2509/2510. And then, look at that drop. That's quite something, isn't it? Now, we spiked the zone a little bit. Do you see that? See the wick? We spiked the zone. Now, I wonder why. This is Tuesday. This is Monday. This is Friday of last week. This is Thursday of last week. When you have a bullish cross, blue line gets above the green line, that leads to an extended move. The first time price revisits that area will almost always be good support. Would you call that good support? Look at the horizontal line. Over and over again and again. Does it happen 100% of the time? No. Very few things do. But at least we're honest about it. Okay? We tell you the truth. So here we are consolidating at the weekly zone. That's what happens 70% of the time. 20% of the time we get rejected. 10% of the time, the slice. Okay? In Q. Here's where we opened, and the 9 o'clock candle. No. That's 6 o'clock. The 6:30 candle. Last night. The 6:30 candle opened at 25,192. Dropped basically 50 points. At $20 a point, that's $1,000 per contract traded. Not bad. Then we consolidate sideways. Then we reach down and touch the zone, 25/26. Support sends us looking for resistance, and we find it right here. Now, you see over here where the black step line crossed the BVC? Important price, important area. Good spot for resistance. Resistance sends the market looking for support, which it found again at the short target, and then it spiked down to the zone. Support sends us looking for resistance. We didn't get all the way up to that zone overhead. And if I could scroll back far enough, I would show you why. But maybe you should do it so you learn. Go look left and figure out why price stopped there. So now what are we doing? We're doing some wide-ranging consolidation at the zone. That's what happens 70% of the time. And this spike down here, see where red turned to blue? I mean, literally, do you see it? Look at the horizontal line. Crude oil. Crude oil opened and flatlined for quite a few hours last night. Then it ran up to the zone overhead, pulled back to the BBC. The pullback held, sent it back up to the zone resistance. And then we finally got a drop that took us down to the low of this body right here, to the tick. Now, the short target was based on the wick, okay? So we didn't catch it that time, but we moved plenty. This one candle right here opened at 61.50 and dropped to 61.30. That's $200 per contract traded. You only need $100 to get your goal for the day per contract traded. Support sends us to resistance, which sends us back to support, back to resistance, back to support. See, we hit that short target there. Once again, to the tick. Bounces up to the BBC, and now just hanging right below the BBC. Things look pretty quiet for crude. Quiet and sideways. Gold. This was the opening candle last night. We opened last night at 39.83, and we hit the target in the first 30-minute candle. $1,100 per contract traded, right there in that one candle. Now, that's just up to the target. It continued higher. It ran all the way to 99. So it opened at 83 and ran to 99. That's $1,600 per contract traded in the first 30 minutes. And we just barely took out the previous day's high. That was a new all-time high. Then we get a retracement back to the BBC support, which sends us back to resistance. We fail to take out those highs. That's a sign of weakness. So look what happens. We come down to the short target, pretty much to the tick. Look right there. Black step line crossed red and falling, turning it to blue and climbing. And there it is. It's called market structure. If you want to trade for a living, you got to learn how to read the chart. Okay? And our humble indicators make it a little simpler than having to go it alone. So we get a leg up to the long target, a retracement, then we punch through, and then on the pullback, the top side of the long target holds as support. We see that happen day after day. And we put in a new all-time historic high, and then we come back. We spiked the BBC, but see the candle's still touching. Now we're roaring back up. When the step line gets directly above price, that can become potential resistance. When blue and climbing gets directly above price, that can become potential resistance. So if price can get through the step line and get through blue and climbing, then you should expect potential resistance at 4,008. And then at about 40.14. Okay. And then up here, this is the highest weekly zone this week for gold. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Silver. We opened last night, and in the first 30 minutes, we got to the long target. Hang on, Michael's having trouble getting in. Okay, so Michael's trying to get logged in here. Silver in the first 30 minutes hit the long target. You only need 2 pennies in silver to get your goal for the day. So we have resistance at the long target, followed up by support at the short target, resistance at the long target, and then again a bounce off the BBC, and we have resistance, and then we drop through the short target. Oh, you made it. Okay.
I did, yeah.
And then we bounce from the zone all the way back up to the long target. Now we've come down through that zone, and we're currently trading 47.35. And that covers all of the markets in granular detail. And look at this, guys. We are now getting below, attempting to get back below. We've already been there once. We get below the step line and blue and climbing, then there's a very good possibility that we could see the reversion to the mean or the pullback to the BBC in today's session. If not in today's session, possibly tonight. But we gotta get below this. And this is a bearish engulfing candle, which is one of the strongest reversal signals that you can get. Today's high is higher than yesterday's high. Today's low is lower than yesterday's low. That is the textbook definition of a bearish engulfing candle. So with that, I turn you over to Michael. He'll give you a recap of what happened in the live training room. Do a little live trading, and then I'll come back, wrap things up with a good word for the day.
Excellent. Yes,
Okay.
I had refreshed it. I refreshed and I went to a different one, and I refreshed there. I went to a different browser, and that's what eventually worked for me.
Yeah,
right.
I've been getting that for over a year now. I just keep hitting refresh until it finally loads. So, okay, glad you made it in.
Yes. Here. All right. Let me take a drink before I start talking. All right. So, good afternoon, everyone. Today is Tuesday, the 7th day. Tuesday, the 7th day of October 2025. Tuesday, the 7th day of October 2025. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. All right, there is no credit card required for this trial. Just go to mytradingiq.com, click on the purple button. No credit card required for the trial. Once you do that, you can be brought to this registration page where all that we ask for is your name, your email, and your phone number. Down at the bottom, gives you TradingView login ID. All right, down here gives you TradingView login ID. If you don't have a TradingView login ID, click on this link, follow the instructions, get yourself a TradingView login ID. All right, the essential level will work out just fine. Doesn't cost you anything to start the trial for TradingView. You do need to get real-time data. That is $7 a month, but get that. Okay. And you'll be able to get your indicators indicating. All right. Now, we had a pretty good day today. Another one that was 4 figures anyway, which is good. It didn't start out so good. We had to work back from an original deficit, but we did. If you can read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. On the NQ, which was our original deficit, ended up with a plus 185, and the YM ended up with plus 38. The gold ended up with plus 10, and the ES plus 11. Put us at 1352.5 on the morning session. Today it took 19 minutes and 7 trades to get to the goal for the day. At that point, I was up $1,900 with 10 contracts, or 190 with 1. And we took a total of 35 trades this morning. So on the month now, we're at $5,965. That's over 5 trading days, averaging $1,193 per contract per 2-hour trading day. On the year now, we're at $207,882 with 1 contract, over 173 trading days, averaging $1,201 per contract per 2-hour trading. We really only have November, December this year. Wow. Where did the year go? Anyway, if you were to quit trading when you get the goal for the day and you're at 1 contract per month so far this year, you would have only had to work about 24 hours. You would be up $147,897 if you traded just like I did. And that's over those 24 hours. You know, with starting with 1, 2, 3, 4, 5, adding 1 per month, you'd be averaging $6,145 per hour in those trades. Okay, All right. Now, let's get into the actual trades. Let me bring out the question box. I don't think anybody's got any questions about all this stuff, but if you do, well, feel free to ask them. Just looking at who's in here right now. All right. So that's where we stand on the day, on the month, and on the year. Now let's go look at the trades. On gold, we had trades. Gold, we had quite a few trades on gold. Gold and the NQ had an equal number of trades. YM and the ES almost had an equal number of trades as well. So we'll start out with the gold. Just work our way across. So Monday is a bank holiday. It's not a market holiday, but it's a bank holiday. I checked. That's what I'm told anyway. On gold, our first trade here on gold, we picked up 9 ticks. The next trade we picked up 5 more to get us to 14. Then we stepped out. Wait a minute, we went from 14 up to 29 before we stopped out. So there was another trade in here somewhere. Might have been this one. Yeah, I think it was probably this one right here. 14 to 29. And then we stopped out. And we're down to 14. And then we stopped out again. We're down to -1. And then it looks like we picked up 6 ticks. No, 7 ticks. Got us to +6. And then a break even, and then another break even, and then 4 ticks got us to 10. 15 ticks got us to 25. And then the last trade of the morning session was the stop out right here. And that brought us back down to 10 on the gold. During the break, this was a trade right here. This one didn't go full cycle. That wasn't a valid trade, but it didn't go full cycle, so this wouldn't have been a trade here. That wasn't flat in the bar before. That was nothing. There are a lot of instances like this where it was approaching the midpoint from the wrong side this morning, particularly on gold. There are a lot of instances like that. Meant the markets were just whipping quite a bit. They whip right up, they get on the other side of the midpoint, and then start coming back down. Did it on the bullish side too. I know there were some instances like that on the bullish side, like right in here. The midpoint used to be way up there. Right in here, going up to the midpoint from way down here. Usually I just, I don't take those trades because they don't work out as well. But anyway, during the break, let's see what else happened. There was a trade, that was an okay trade right there. Would have eventually worked out, came really close to stopping out. This was an okay trade that worked out. This one worked out. This one worked out. That one was not one. That was not one. Not. That was one right there. That was one. That was one. That was one. That was one. Moving all the way over through here. That was a trade. That was a trade. Oh, I'm sorry, that wasn't a trade. I had a green background. It was, and this is what I was talking about. It's approaching it from the midpoint from the bottom. That's what I was talking about earlier. There are a lot of instances like that today that just, it was setting up the look of a short trade right here. If it didn't have the background color, I would have been looking to sell this right here, not buy it. And so it went all the way through here, and this is doing it the other way, right? Red background, the midpoint approach from the top down. I would have been looking to buy that if we didn't have the background color. Just given the price action. Anyway, that was the way gold worked out. There are a lot of odd instances today where that happened, and it doesn't normally happen that way. On the YM, let's go here and back on the YM. Okay, so on the YM, our first trade was plus 10. Our next trade was minus 15 to the tick. And the trade after that, we picked up 10 more. So we went from 10 to minus 5 to plus 5 on this trade. And then went from plus 5 to plus 7 to plus 12, plus 12 to plus 13, and then plus 13 to plus 38. This was a 25 tick trade right here. That was the big one for the day for us, for the YM. Then the break came, and during the break, let's see. Nope. That was a trade right there during the break. That was a trade there during the break. Those two would have worked out. This one was a trade here also, but that wouldn't have worked out. See, the easy and obvious trades are the ones that start at the bottom, above for a short trade. Where they start above the midpoint and then they close below the midpoint, bringing us out of the overbought. Like that one right there. That's the easy and obvious trade. For the shorts, anyway. This one right here, same thing. This one right here, same thing. For the longs, this one right here, starting below, ending back up. That's not one, it didn't hit it. This one right here for the short, that was not one. That was not one, and you're pretty close to a long trade right here. So the YM was giving up some pretty okay. The YM trade was pretty close to giving a trade right now. The YM is pretty close to giving a trade right now. It's got a low of 820. So right now we'd be buying 830, just like this. Okay. Now it's gone down. It's gone down almost too far. I'm going to cancel the order I have right here. We'll have to wait and see what happens on up close. 15 is the bottom, 24 is the top. So it can't go any lower than 14. If it goes lower than 14, then it won't be a trade. Right? That's what we have going there right now. Get the up close, we're going to trigger in. And we did get the up close. It actually is a bar. A tick, no, that's right there. It's just borderline. Let me find my DOM so we can watch it. Here it is. Okay, do window on top on it. All right, so this was almost not a trade because of where it was. It was below the midpoint, just a hair below the midpoint. I like what I just said a minute ago. The easy and obvious trades are when they start below and they close above. That's not really above, but we're gonna let it run. It should work out. Here we go. We need to go to break even after 5 ticks, so it's got to get to 31. One more tick. We'll go to break even. There it's going. Stop to break even. And we'll lock in 5 on that. $10 on that. That was just going to go for 15 right there. Once it gets up above 41, if it gets above 41 again, nope, 10. Okay. But that's it. That's the trade setup right there. Right? So we picked up 10 ticks on this one. I like it to close above the midpoint, really. If it comes down and it bounces off the midpoint, if it were coming down like this and the low of the bar was right there, not the high of the bar, that's a little more attractive. But usually just above the midpoint works for me. ES now. Let's go back to the beginning of the ES. Okay. We still have all the NQ to do. So on the ES, we started out with a +4 right there. Then we had a break even. Then we had a +8. Got us up to 12 overall. Then we stopped out, brought us down to 2. Then I took this one. This was the kind of trade that I took. I thought it was going to be on the midpoint or below it, and it was actually a little bit above it. But I got 8 ticks in profit on that. This is the opposite of the trade that I was just talking about on the other one. This is the kind you want to take, that I like to take, where it opens above the midpoint and closes below it. No question about it. We only got 1 tick on that, but it went really nicely. And that was, I think that's all we did on the ES. It is. But let's talk about the break. This was a trade here during the break. It eventually worked out. Would have been really close to stopping out. Depends where you got your entry right there. Going all the way over here. This was not a trade. Not a trade. Not a trade. Not a trade all the way over here. This was a trade right there. As we keep moving over, more and more and more, nothing there, nothing there, nothing. This was a trade right here. That was not because that didn't go full cycle. That was actually a trade right there. It looks like it was flat right there for one bar. That was a trade right there. I don't think it would enough to get the stop to break even, so that would have stopped out. That was a trade right there, bouncing exactly off the midpoint. That would have been an okay trade to take right there. It took a while, but it eventually went up. And that's it. That was it for the ES. We ended up with a plus 11 on the ES. Now, the NQ. Let's just look right here on the NQ. The last trade on the NQ was right here. Okay, so before I scroll up, just see if we had any trade going on right now. And we don't. So down at the bottom, in the black right there, I'm waiting for it to say 9. Look at all those bars we had in there today. Here we go. Says I can't see. Data. All right, so this is my first trade right here. And we stopped out pretty much to the tick on that one, minus 25. All right, the next trade that we took on the NQ, we picked up 12 ticks to get us to minus 13. Then we picked up 25 ticks to get us to plus 15. Then we had a break even, and then that's odd that I got 25 ticks on the NQ. Then we had a break even, and then we went from 23 up to 43, so that was 20 ticks, then 43 to 59, then 59 to 67, then 67 to 78. I'm sorry, 67 to 83. 67 to 83. Then from 83 to 95. And 95 to 140, and 140 to 185. And I think there's one in here that I didn't get. Positive gain there I didn't get. But anyway, we ended with 2 45 tick trades is how we ended up with on the NQ. So we ended up with plus 185 after starting out with minus 25. So the NQ came around after a while. It really didn't have a lot of follow through until at the end. Here we've got those 2 45 tick trades. It really didn't have a lot of follow through until then. During the break, let's see, there was one trade right here during the break, would have been a stop out. The next trade, wow. Oh, this wasn't during the break. This is all during the session. Okay, well, I see there's another trade here that I didn't count. All right, well, let's get into the break then. That was still during the regular session. Let's see, right here. There was a short right there, worked out. There was a short right there that worked out. There was a short right here that worked out. There was a nothing. A long, that would have been a long right there. Would have been a break-even trade. Would have been a long right there. Going through all this. That would have been a break-even short. Then, not really anything. Maybe one more right there that would have worked out. Long right there, that would have stopped out. This is 12:19, still got a whole hour to go in this. There are a ton of bars today on the NQ, on the 19 range. A long right here that would have worked out. A short right there that would have been okay. Right there would have been okay. That was not a valid one. Right there would have been okay. Right there. Right there. All those would have been winning trades on the NQ. And that looks like it's about it. All right, that brings us to current. So if we get a down close on the current bar, and then an up close on the next one, we'll have a long trade. Okay. So with the NQ, we ended up with plus 185 ticks, and that's not counting the few positive trades that I forgot to record. All right. So, I want to suggest to people who are having a hard time, if you're in sim, that's great. That's fine if you're having a hard time in sim. It's not great that you're having a hard time, but I got an email during the break about one of our longtime partners who said he's still struggling with getting the right trades. He's taken trades, and he showed me 3 screenshots of trades that he took, and I looked at just a couple of them, and he's taken trades, and it looks like he's taking the right trades. And the question is, how do I end up getting all the right trades where he doesn't? He gets all the wrong trades, and I don't get all the right trades. Let's start with that. I stopped out of the 35 trades that I took today. Or 38, whatever it was. I probably stopped out 6 times. Just about 20% of the time that I stopped out on the trades that I took. The one thing that I did notice is that I took a lot of trades. I didn't stop trading when I stopped out. I didn't say, oh man, I stopped out again, I'm going to quit trading. I didn't say that. If I stop out multiple times in one market, well, then I'll kind of lay off that market and go to something else that's not stopping me out. Today, like on the NQ today, we stopped out on the very first trade, and we won one more time somewhere along there. Yeah, we stopped out one more time somewhere along there. Stopped out on the first trade. Then we worked our way back from that. Then we stopped out one more time on the YM. We stopped out on the second trade. On the ES, we stopped out on the third trade I took on the ES. On the gold, we stopped out on the 5th trade I took. And the final trade that I took. So how many is that? 1, 2, 3, 4, 5, 6 stop-outs. It's 6 stop-outs and 38 trades, I think, right? 35 trades. Okay, so that's 16% stop-out, roughly. A little better than that, probably 18% stop-out. Which is good, as long as you keep trading. But if you get all those stop-outs right in a row, well, then it's not good. And so I guess what I'm trying to say is just keep executing your edge. If you have an edge and you're doing things right, if you stop out, there's a trade right here on the gold, by the way. If you stop out and you're doing things right, you're executing your edge, and you're just in the period where it's not working out for you. The market's not working out at that time. So just step away and come back a little while later, or just go to a different market. Change the time frame on the market you're in. Now, there was a question today from Robert, who's a longtime partner but went away, and he's come back recently. And he wanted me to look at crude oil. And when I went and looked at crude, I think I used the YM chart to begin with. And I just went to CL. And Dwayne said it was the X. So we'll go to the X. And we look at crude on the 9 range. When I looked at it this morning, I hardly had any trades at all. I don't think I had a single trade, or maybe just one.
It's been very flat last couple days.
And then I looked at the 7 range, and the 7 range had a couple of trades, but nothing really to write home about. And then I looked at the 4 range. In the 4 range, now I haven't traded crude since Jimmy Carter's whatever it was, the day they had pretty much shut down the equity markets on his funeral, I guess, day, or whatever day it was in January 9th or 10th or something like that. I traded crude and natural gas that day. That was the last time I really traded crude. But if you go down to the 4 range, there's opportunity on the 4 range. So go to where there's opportunity. If your edge isn't giving you any opportunity, you don't have to change your edge. Your edge is the same. It's just the time frame needs to change. The trade setups are the same across all markets, and you guys know to go here to trade rules, and you have right here the risk management for every one of those different time frames. So just go to one of those time frames that's currently working with the way the market's acting today in this moment, and execute your edge. You don't have to stick to the time frames. I stick to the same time frames all the time, because then everybody that's watching generally sticks to the same time frames with me. But if I'm not having success in one market, then I'll pretty much stop trading that market until I see it starting to generate trades that are worth taking. And I suppose I should probably say that out loud. But if you're not sitting at your desk when I do say it out loud, then then you're not going to know why. But you have an edge. You just got to keep executing your edge. Okay. Looking here on the 4 range this morning, starting at 9:30. There was a good trade right there. There was a good trade right there. And when it flipped around on the short side, the first valid trade on the short side was right here. That would have been a break-even trade. And the next trade on the long was right there. That was a good trade. The next trade on the long, that wasn't one, was right here. That would have been an okay trade. Then it flipped over to short again. That was an okay trade. I mean, it's a 4-tick range, so you're bumping your stop to break even after 2 ticks in profit. So that would have been a break-even trade right there, probably. But it followed up with another one right here. That went about 6 ticks in profit. That would have been okay. With a 4-tick range, 6 ticks in profit is 1.5 bar lengths. So you keep it in perspective. All right. So I don't see anything that stopped out yet. There's a trade right there. I didn't see any of them that stopped out on a 4 range. There might have been 1 or 2 in there that did. I just don't, I haven't focused that much on it. But I just wanted to point out, if what you're working with is not working, it's because the markets aren't conducive to it right at the moment. All right, switch to something that does work. You have the same trade setups, the same logic, the same tools, the same everything applies. Just apply it to a market that's conducive to the actual edge that you're executing. And I stopped out 6 out of 35 times today. So, if I'd have gotten all 6 of those at once, well, it'd have been a little harder to recover from. I still would have kept trading, but it would have been a little harder to recover from. And I stopped out at least once in each market. So it wasn't, it wasn't like one market was worse than any other. It seemed like the NQ was going to be, but then the NQ came around. It wasn't really following through with the trades today, but it was given an ample number of trades. I just wanted to point that out. And the guy who
last week we had, I think it was 3 stop outs in Logic 247, and so far this week we've had 1. So, but it's at 20% or less that you're looking for. And don't try to put an edge on an edge. Don't waste your, I just said this earlier during this broadcast, don't waste your time and treasure chasing the false promise of never getting stopped out again. If you can stay at 20% or less, and with Logic 247, we've done that for over 20,600 individual handcrafted alerts. And I'm sure that's probably right around where Michael has averaged in the room. Don't that's an incredible edge. But if you start trying to put an edge on an edge on an edge, then pretty soon you end up with nothing at all. Yeah. You're just wasting time and treasure. So just don't do it. And I just had a thing pop up. I put it in the Breeze channel and in the boardroom. The S&P is launching a new product called the S&P Digital Markets 50 Index. And it will include 35 companies. Let's see, it will include 35 companies involved in digital asset operations, infrastructure providers, financial services, blockchain applications, and supporting technologies. But will also be combined with 15 cryptocurrencies selected from the S&P Cryptocurrency Broad Digital Markets Index. S&P Global believes this will provide market participants interested in exploring crypto-linked opportunities with a measure of performance across both sides of the crypto ecosystem. So they're doing with crypto kind of what they did with the S&P 500. That's 500 large cap companies that meet a stringent list of requirements. And they're always reshuffling the deck with the S&P 500. A couple of weeks ago, 3 companies were booted out and 3 new companies were brought in. Same with the Dow Jones, the S&P Dow Jones. There's 30 companies. If one starts to falter, they're removed and replaced with a strong bullish company. And this index will work in the same fashion. So you don't have to do the homework. You don't have to do the research. You got the professionals do it for you. Every day they're analyzing best of the best, are crunching the numbers and adding or taking away companies. Or so it doesn't give a start date in the article when it'll be available or at what price it will trade at. But yeah, it's kind of big news. So
this would be interesting to see what cryptos are in that. That'll be
obviously it'll be BTC, Ethereum, Solana, probably XRP, I would think.
I would think so. It'd be a big thing for all those companies.
Yeah.
For all those cryptos, I would think it'd be a big deal.
Yeah. And the fact that they are going to look for 15, that's they're kind of casting a wide net. I mean, I know there's thousands out there, but anyway, go ahead with your trade. Anyway, I just want to make sure everybody, guys, it's in the Breeze channel. You can read the article that I was just quoting from.
Okay. Well, the NQ's got a trade right here. I just took it right here. This is exactly what I was talking about. This is the kind of thing you're looking for, and I have what I have locked in. I had 12 ticks, I think, right there. Anyway, that's exactly what you're looking for. All right. So we had 12 ticks on that. We had 10 ticks on the YM in this session, and me talking of it. With that, I can pass it back out to Fabulous. Well, let me show you how to take the free trial one more time. If you haven't taken the free trial, go to mytradingiq.com. Click on a purple button, no credit card required. Just click on that purple button, and it will bring you to the registration page. Just fill out the registration page. All right. And that is it. With that, I can pass it back out to Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah. You think, Bob? Okay. All right. Let me. Hang on. Here we go. All right. Recap of the morning session.
Today, let me go look. Today it took 19 minutes and 7 trades to get to $1,900 with 10 contracts.
Good job.
Thank you.
All right, guys. We covered all the markets in granular fashion. Let me point out one more time here. We've got a bearish engulfing candle on the day. Today's high is higher than yesterday's high. Today's low is lower than yesterday's low. That is one of the most important turning point candlestick signals. So I know we've been talking about how we're overdue for a deep retracement. I mean, a 24, that's the shallowest possible. But here's the 50. My concern is, and of course it takes pullbacks, okay, to keep a market strong and climbing. But what happens is when you don't get those pullbacks, like it's been forever, since April, we haven't had a 24% fib retracement. And so what happens is this thing gets top heavy, and then instead of having a measured move down, like leg retracement, leg, I mean, I want to see it go to the 50, okay? But I want to see it go in a measured move. Leg retracement, leg retracement, leg retracement, leg, okay? But this kind of action, what it tells me is we could be staring down the barrel of another Black Monday. Some of you are old enough to remember Black Monday. If you're If you study the markets, you've certainly read about Black Monday. What that would equate to is this 50% retracement that I'd like to see. It could all happen in one day. Boom. That is not good. That is not healthy. People get hurt. So I'm just pointing this out because I think we're on the precipice of something like that potentially happening. Okay? So, not trying to be a fearmonger. Don't want to freak you out. Just want you to be well informed. Be prepared. You should never make decisions in the heat of battle. Decide now what you're going to do. Even if it does all drop right here. Guess what? Over time, it's going to come back. Why? Because the index, the deck is constantly being reshuffled. Weak companies go bye-bye, strong companies come in, okay? In fact, there'll be an awful, if that were to happen, and you don't freak out, there'll be an awful lot of bargains once this thing finds a bottom, and it will, if that's what happens, okay? So, anyway, we covered all the markets in granular detail, so if you missed it, in about 45 minutes, you can go to youtube.com/CFRN and watch today's broadcast in its entirety. On the ES, we opened, now all of our members and trial members had these targets last night, 5 minutes before the market opened. By the second 30-minute candle, we had already hit the short target, and then we found support at the zone. And from the zone, we ran back up to this bearish cross, back down to the zone, support. Bearish cross represents resistance. Over and over again, support at the zone. Then we make our run to the long target. And then where do we find support today? At the zone, 6747/48. Now the step line is starting to hook to the right. As it crosses red and falling, look for a retracement back to the BBC. The Dow, by the second candle, we had hit the short target. At 60 points, you only need 20 points to get your goal for the day. You could have had it last night on the second candle. You're below the BBC, blue and climbing turns to red and falling. All you got to do is sell. This candle opened at 949 and dropped to 875. It's about 75 points, give or take. This low right here, okay, didn't quite make it all the way to the zone. It overshot this area right here. That's where I would have expected support. And it is right where the bottom of those bodies are, right there. Support sends you to resistance, back to support. And since 11:30 Eastern, we've been consolidating at the weekly zone. The zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. This is Tuesday, this is Monday. Back over here is Friday, okay? So these are this week's zones that were published yesterday morning, as they have been every Monday since December 14th of 2009. On the Russell, here's where we opened last night. And we dropped to the zone and found support, consolidated, and then there it is, short target. Support bounces you up to resistance. The pull back to the BBC holds more often than it doesn't. Sends us back down to the short target, consolidate at the zone, take off again, and find resistance at the zone, 2509/2510. And then the bottom falls out, and where do we find support? At the zone, 2472/73. We're consolidating there for 2.5 hours, basically. In Q, there's a reopen. And in the second 30-minute candle last night, so the market opened at 6 p.m. By 6:30, you could have had your goal for the day. This candle opened at 192 and dropped to 141. We'll call it 50 points at $20 a point. That's a $1,000 per contract candle right there. There it is. Consolidate, then we hit the zone to the tick, and we get a leg and a retracement, and then a leg, and look left, nothing there. And now look where we've dropped. And what are we doing? We're doing wide consolidation at the zone. Crude oil. Zone resistance back to the VBC. Pull back holes more often than not. Back to resistance at the zone. And then we catch a drop right here, which lines up with right here, market structure. Support sends us to resistance, the pullback holes, that sends us back down to the short target. And we spike this zone and then recover, all in one 30-minute candle. Okay. Now, that right there filled the gap from Sunday night. There was a Logic 247 alert out there waiting for this, and it finally triggered. That alert was published Sunday night. So we go back to the BBC, the pullback holes, which sends us from resistance to support at the short target, which sends us back to resistance at the BBC. We've spiked it a couple times, but we're still below it. And we have red and falling. So my anticipation, if crude moves, is you'll see lower prices. Last night on gold, remember the targets were out 5 minutes ahead of the open. We open above the VBC, so you automatically expect higher prices. This candle opened at 39.83 and up to 94. That's $1,100 per contract traded. But it actually kept going all the way to 99. So, if you look at it from that perspective, from 83 to 99, that's $1,600 per contract traded. You've earned the right to trade 10 contracts, that's 16 grand. Resistance, got a triple top going here, sends us back to support at the BBC. The pullback hole sends us back to the long target. Blue and climbing turns to red and falling. We get below the BBC and it takes us right down to the short target, almost to the tick. Below was 63.4, so we missed the short target by 4 ticks, which was based off this right here. Simply a matter of learning how to read the chart and how to understand what the indicators are telling you. Gold now is back in climbing mode, and this is the all-time historic high right here. So it looks like gold wants to challenge it today. Silver coming around. If the step line crosses red and falling, we should see a retracement to the BBC. Pullback holes more often than not, so if it does, we get a move down. If it trades through the BBC, be aware you got a bearish cross right here, and that represents potential resistance. And then the underside of the short target, and then right there where blue turned to red. Okay. Now, where blue turned to red, that's also where the step line crossed blue and climbing. 48.29, that is an incredibly important price, important area. So, now, again, I did all of that in a much slower, granular fashion at the beginning of the broadcast. So if you missed it, go to youtube.com/CFRN, and you can watch this broadcast in its entirety in about 45 minutes. To become a member, send an email to Valerie, support@cfrn.net. Let her know you want to become a member. She'll send you the information you need to get signed up. Once you're signed up, then she'll send you a lot of information. Some of it you won't even know what it is. That's okay. Create a folder in your email client, and everything she sends you, just stick it in that folder. Because there'll come a time in the middle of the night, over a weekend or a holiday, you're going to need that information. And you'll have it at your fingertips. You won't have to wait for somebody to send it. She sends you everything you need in the beginning. People tell me all the time, oh, I never got that. I said, oh, yeah, you did, because everybody gets the same package. But if you put it in a folder and label it, you'll know where it is. Once you become a member, you'll get 2 hours of live training every trading day. It's an interactive environment. Along with 2 hours of live training, you have access to private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. As I just showed you, price moves the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. It's just how markets work. That's why it's important that you learn how to read the chart. And that's what the Logic 247 alerts teach you to do. They teach you to read the chart. When you're reading a good novel, okay, and you get to the bottom of the page and it's kind of a cliffhanger, in your mind's eye, you already know what to expect when you turn the page. That's why they call them page turners. Now, sometimes you'll get surprised, maybe 20% or less. But other times you'll be spot on, okay? Now, when you're learning to read a chart, there's no words, no sentences, no paragraphs, no punctuation. It's a whole different language. Nonetheless, you need to be able to read the chart. You need to know where to expect the next potential resistance, where to expect the next potential support. And guess what? You're going to be wrong 20% of the time or less if you learn how to do it right. Let me say that again. You're going to be wrong 20% of the time or less if you learn to do it right. There is no holy grail. There is no man, machine, algorithm, AI, bot, nothing that can tell you what's going to happen next in the market with complete accuracy. It's not possible. There are too many factors involved, too many market participants. You look out on the DOM and, there's 100 contracts on the bid or on the offer. That guy gets indigestion and has to go to the drugstore to get some Pepto, so he pulls his order. Does that not shift the dynamic and the thinking of all the other market participants? Will that not affect their behavior? It's like the butterfly flapping his wings in the Amazon rainforest. Can that really cause a flood in Seattle? You tell me. As a passport holder, you not only get the Logic 247 alert so that you can learn to read the chart, you also get the concierge trade alerts, typically 5 minutes ahead of the market open at 5:55 p.m. Eastern, each and every trading day, Sunday through Thursday. On Monday mornings at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They do not change in any way whatsoever. They're carved in stone. That's how it's been since December 14th of 2009. As a passport holder, you'll be able to attend the members-only workshops that are held every Thursday night at 8 p.m. Eastern. And last but not least, you'll get the golden keys that open all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. Just email Valerie, support@cfrn.net, to set things in motion. All right, let's wrap it up with our good word for today. Seeing yourself through God's eyes, part 1. We are God's handiwork, created in Christ Jesus. Ephesians 2:10. If you could change one thing about yourself, what would it be? Most of us could come up with a pretty long list. The fact is, Jesus alone holds the world record when it comes to perfection. In the words of Jennifer Dukes Lee, until you are convinced of God's incredible love, you will continue looking for replacement love everywhere but in the heart of Christ. No matter where you live or work, the enemy prowls like a lion, stalking people on Wall Street, fashion runways, suburban cul-de-sacs, and Facebook walls. We're in a showdown with Satan, who will use every opportunity to whisper in our ears. What are you people thinking of? He'll tell you you're too fat, too frumpy, too stupid, too poor. He'll do whatever he can to set your affections on the things of this world instead of on Christ. And he'll wrap those accusations in glossy magazine covers if he has to. Don't buy into the lies. Jesus said in John 8:44, there is not an iota of truth in him. He is the father of liars. One Christian author summarizes it like this: discontentment is one of the big giants we must conquer if we ever hope to enjoy life. We may not have all we would like to have, but we certainly have more than a lot of people. No matter how you think you look, there's somebody who would love to look like you. No matter how old you are, there's someone who would love to be as young as you are. Love yourself and love your life. It's the only one you have. The truth is that you're the only you God made. After that, he broke the mold. Seeing yourself through God's eyes, part 1, part 2 tomorrow. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.